Ed Yardeni. The Fed's 2% target could be achieved well ahead of schedule. Going to hear why he's bullish on 2024. So once again, appreciate y'all joining me as always. Thanks so much for being here. Thank you for being subscribed to the channel. Ed Yardeni, let's hear why he's bullish on 2024.
Ed, thanks so much for joining us. So what are your reasons to be bullish in 2024, especially given, as we talked about all morning, just the incredible rally that we had last year in all the indexes?
Well, the past 2 years, I think, could be described as years of living dangerously, and we got through them. The danger that was widely expected was a recession, and it turned out to be the so-called Godot recession. It just hasn't shown up. I don't think it's going to show up in 2024, and that's mostly because one of the most bullish things that's been happening is inflation has turned out to be relatively transitory. I know I get some backlash on the notion that inflation has been transitory, but the reality is the year-over-year percent change in inflation has come down dramatically. And I think the Fed's target of 2% could be achieved well ahead of schedule. And as a result of that, the stock market and the bond market have been anticipating that the Fed not only is done raising rates, but is going to be lowering interest rates this year. So I think those are just some of the dozen things that may continue to work out relatively well. I also think the market's broadening, which is a very healthy sign.
Yeah, on the point about mission accomplished on inflation, there are still some out there who say, number one, the true lagging effects of interest rate increases haven't really been seen at their fullest yet. And number two, that it's really that last 1 to 1.5%, getting down to 3.5 or 3 was the easier part. It's that last percent that's going to be the toughest and the longest. How do you respond to those concerns?
Well, the reality is interest rates have already come down. I mean, we're waiting for the Fed to lower interest rates this year. And I'm not in the camp that thinks it's going to be 4, 5 or more rate cuts because I don't see a recession. I think the economy is resilient. The Fed's going to be fairly pleased with the way things are going, and I don't think they're going to want to rush lowering interest rates. So I don't expect an immediate cut, which seems to be some of the thinking out there. But bond yields, mortgage rates have come down, and housing had what I call a rolling recession over the past 2 years, and now it's going to have a rolling recovery. There's also evidence that we're bottoming in the goods recession, the retailing recession. Meanwhile, the services economy remains very strong. So I think the notion that there's long and variable lags, we've been waiting a long time for these long and variable lags to have an impact, and they have in some sectors, but not across the board. With regards to inflation, I think it's turning out to be very spiky. It went straight up, it's come straight down. It does tend to be fairly symmetrical. The risk still is a 1970s style scenario, and that's really more related to the geopolitical risks that are out there. We had 2 oil shocks, oil crises in the 1970s. I suppose we could have another one in the current situation, in which case we would once again have an inflation scare. But so far, as horrible as the situation is in the Middle East, we're not seeing it affecting the price of oil at all. Quite the opposite. The price of oil has actually been coming down since the start of the Gaza war. And that's because there is just a lot of supply. And demand, especially out of China, has been very weak. My bottom line in all this is we didn't have to have a recession in order to bring inflation down. The Chinese did it for us. They have had a recession, and their prices have come down, and that's been good for us.
Yeah, no, they're definitely, China has been one of those upside surprises, at least for us. They're exporting some of the deflation that they're seeing. You mentioned earlier that you perhaps aren't aligned with the market. The market's expecting maybe 6 or 7 cuts this year, starting in March. Do you think there could be a pullback in equities if they don't get a March cut, or there's some language in the next couple of Fed meetings that indicates that maybe they're not on board?
Let me answer that. Could there be a pullback in the market if all of a sudden the Fed says they're not cutting rates? Or, people start to get worried about, the Fed might not actually cut in 24. And the answer is, there would be some short-term big volatility moves down because people would be like, oh my gosh, they're keeping rates here. And by the way, I think that's one thing the market has not potentially at least thought about, is a potential that rates don't even come down in 24, right? I mean, if let's say even if inflation, let's say, is in the twos, when I talk about inflation, I'm talking about CPI, but let's imagine an economy that's growing. Let's imagine oil prices start going back up as we get into the springtime. Fed starts to worry about maybe a commodity cycle again. Maybe the Fed's not as fast with cutting rates as the market wants to be. Or maybe they just don't cut it at all, right? So either of those scenarios, the market might not like that. And the market might throw a temper tantrum if that happens, right? So just a little food for thought there.
Don't show that. Right now they're showing, I think, 2 or 3 cuts. Market's
Correct.
ignoring that.
Well, I tend to focus on the fundamentals of the economy, but I also look at sentiment. A lot of us pay attention to sentiment, and from a contrarian perspective, everybody's bullish. Everybody's too happy coming into the new year. So would you know it? We're starting off on a negative note here, at least on the pre-market open, before the open. But I'm thinking that the market may get disappointed here. Last year, the widespread consensus was that the first half was going to be pretty bad, and the second half might be better. It turned out that the entire year was actually pretty good. But I'm thinking, if we're going to have to pick which of the halves of the year is going to be on the weak side, it might actually be the first half.
Yeah. We'll see. Obviously, you guys know how I feel about Q1, okay? Well, we do have a reason the market could start kind of freaking out here. In Q4, the market didn't look at anything as a negative, and that's because Wall Street needed a Santa Claus rally. And so they didn't want any manipulative behavior in terms of, talking about anything bad or anything downside or anything like that. It was, all this stuff got brushed to pass. But now that we're into the new year, they can start talking about bad stuff again, scary stuff again. Oh my gosh, this is bad. And so, you have obviously the stuff that's going on in the Red Sea right now, right? If they want to start freaking out about this, they can start freaking out about this, right? They can start freaking out from the perspective of, oh my gosh, this is going to mess up supply chains. This is going to cause, this could cause shipping rates to go up substantially, which could hurt companies' margins. You could run 1,000,000 miles with this if you really want to, and you really want to freak the market out and scare them. Oh, it's going to spike inflation again because it's going to cause a whole chain of events. Like, you can freak everybody out big time. And if they want to blame the market going down here and to really just take more profits, they could blame it on this situation here and kind of freak everybody out real bad, real quick, right? Now, this is the market on average in election years, right? 1949 through 2022. You want to pay attention to this green line right here. This is how the market usually performs. Now, I want to zoom in on the next few months specifically because that's kind of what everybody's focused on, right? So my opinion is, so usually you just kind of have an up, and away for the first, 6 weeks or so of the market, of a new market year and a presidential election where the sitting president's running. Here's my opinion, okay? I think we could have a much more up and down market in this Q1 than a usual market. I think we're going to have some violent moves up and down as we kind of, let's just call it in Q1 in general. I think it's going to be way more volatile. It's such a perfect setup for a very kind of up and down Q1. Such a perfect setup between Wall Streeters wanting to take profits in Q1, looking for a reason to exit some of these stocks and cash some of those profits, and they just need a reason. They just need a reason, okay? Keep that in mind. And on top of that, the VIX has been dead for months, the volatility index. Usually the VIX doesn't die like that for months and months and months until it makes another move, right? And so there's a high probability we're going to get a big spike in the VIX at some point. When I say big spike, I'm not talking about a 2020 type spike or a great financial crisis. I'm just talking about the VIX goes up, 50%, 100% in a very short amount of time, okay? Something like that. And I think we're kind of set up for a big short-term pop at some point here with the VIX. So being that you got all that there, I think it's going to be a very up and down Q1. I think there's going to be time periods when everybody's kind of flipping out, freaking out, and you're going to see selling. But like I said, guys, keep in mind, they don't care about any of this stuff. The Red Sea, all this crap, they don't actually care about any of this. They will use it as an excuse to sell because they want to book some of these profits on some of these stocks, okay? So just a little food for thought. Just remember, they don't actually care about any of this, okay? They use it as an excuse to sell. And then when they're done and they shake out, then they'll go ahead and make their next move, okay? So just something to keep in mind there. All right, so now let's talk about some new inflation data that's pretty shocking here. So I was looking at Trueflation here today. Trueflation is now under 2.1% inflation rate in the United States of America. Incredible, right? Which, you're starting to think we might be in ones. Like we might literally start to hit the ones as far as Trueflation numbers. I mean, we're almost dang there, right? And Trueflation numbers have been kind of, let's just call it, ahead of wherever the government numbers have been. So wherever Trueflation's at, the government numbers are probably going there. It's just, it takes a game of catch-up, right? It's a game of catch-up. I mean, Trueflation at 3.1% way before government data had us at that. So whatever you're seeing here, you're likely going to see that in the government numbers. It's going to take a little bit to get there, right? Now, if we go ahead and take a peek at commodities, this is GSG, the commodity index. We're under 20 right now, which is great news for us in regards to inflation. That means that, we're just not getting any sort of commodities inflation right now, which is very good news. We do not want to see commodities inflation at all. If we see big commodities inflation, then we have to really start to worry about inflation again down the road, because the world runs on commodities at the end of the day, right? Everything comes from commodities at the base start of it, right? And then if we look at crude oil, for instance, crude oil is down 21% in the past 3 months. It's showing no life of coming back at the moment. And this is even with all the Middle East drama. All the Middle East drama is going on right now. And oil's still gone down 21% in the past 3 months with all the drama in the Middle East in the past 3 months. That's incredible. Now, something to keep in mind here, okay? And this is out of CNN Business yesterday. Xi Jinping rings in 2024 with rare admission that China's economy is in trouble. Now, if we are in a situation where China starts to stimulate heavy and their economy starts to come back, you could start to see oil prices heat up again. Okay, so just a little food for thought in regards to that. So don't bank on oil being $70 forever. Okay, that's all I'll say about that. Because if they start to stimulate heavy and their economy starts to come back, you're probably going to see higher oil prices overall, right? And if you're wondering kind of what's going on, China's economy has been plagued by a set of problems this year, including a prolonged property downturn, which has been going on for a while, record high youth unemployment, stubbornly weak pricing, and mounting financial stress at local governments. Now, if you talk about the youth unemployment rate in China, it's over 20%. Over 20% youth unemployment rate in China overall. And they kept their economy closed down for far too long, and they're going to need to stimulate their way out of this, in my personal opinion. Now, this is a very similar number that we reached in the United States back in the Great Financial Crisis, which shows you how dire the situation really is in China and how bad their economy is. The fact that their youth unemployment is at rates that are around or even above where we were in the United States after the Great Financial Crisis, that means you're in trouble. That means your economy is in a bad place. But that also means you've already gone through the majority of the pain, and from here you're likely coming out. Just a little food for thought. People look at a number and think because it's super bad now, it's going to get even worse or it's going to stay that bad. No, if I had to bet, is Chinese economy going to improve in 24 or get worse? I think it's actually going to improve in 24 versus 23 overall, right? Now, this also leads me to something I just want to say. For anybody that's watching this, if you're a Gen Z out there, which most people that watch my channel are millennials, Gen X, and boomers, I'll just be honest with you guys. But for anybody watching this that is Gen Z, okay, keep in mind, you guys have never seen a bad jobs market, ever, in your life. Your whole employment career has been in a great employment picture. It just has, right? And so for us millennials, we went through the Great Financial Crisis, and we have seen how, I was lucky. I felt lucky to get a job cleaning dishes at Einstein Bagels for $7.50 an hour. I felt lucky to work at Walgreens making $8.25 an hour, right? Because look at youth unemployment when I was entering the jobs market. We were 15% plus. And then we stayed 15% plus for years, for 5 years. So just keep that in mind, because this is a time period I think a lot of folks can get kind of lazy. you know, they've never, if you've never really seen a tough jobs market, you can take it for granted, and just don't take that for granted. That's all I'll say about that, because we will see a bad jobs market again someday. It might not be this year. It might be 2 years from now, 4 years from now, 6 years from now, 8 years from now. But I can promise you, we will see a bad jobs market again. And you don't want to be one of the weakest of the weak, because the weakest of the weak, at the end of the day, is a dog-eat-dog world. And the weakest of the weak will be caught. Okay, so just a little food for thought in regards to that. So Chinese economy, I think, starts to get better. That could be a little bullish for oil prices, which could start to hurt inflation numbers maybe in the back half of 24 going into 25, something like that. So just something to kind of keep in mind there, okay? Now, with everything going on, I created a big video for you guys. I think only like 2,000 of you guys have access to this so far. It's pinned comment down there. You need access to this. Watch the video. It's like a 40-something minute video. Goes all in depth on exactly how I plan to invest in 2024. It's going to help you out immensely. I think it's a very important video. Let's just put it that way, okay? It's pinned comment down there. If you're watching this and you're not going down to click that pinned comment and get access to this, like, what are you doing? You're not going to watch a more valuable video than that. I promise you. Whatever video you see on the sidebar, even if it's my video, it's not going to be more valuable than that video. That's all I'm going to say to you, okay? That you probably got some doomsday videos over there. Oh, it's the end of the world, this and that. Oh, my gosh. Trust me. Pinned comment down there. Get access to that and enjoy that, okay? All right, guys, much love as always, and have a great day.